If you've been following this channel for a while, then you know that we are betting on falling prices since Bitcoin hit roughly $100,000. Now, why is the Bitcoin price and crypto in general trickling down in the last few weeks? What's the reason? Are people giving up, or is this early investors still taking profit? Let's have a look at some on-chain metrics most people are not considering. For example, have a look at this. In black, we see the long-term price of Bitcoin. So this chart starts in 2010 when Bitcoin was just worth a few cents, and it goes all the way to today. Now in green, we see how much profit investors are realizing. In other words, those kind of wallets bought Bitcoin for lower prices, and then they later on move it again for a higher price, selling the Bitcoin, potentially realizing gains. Now what we see in red is the exact opposite. That's when people realize losses or when they are giving up. We want to lean towards buying when people realize most losses, when people are giving up. And you want to sell when other long-term holders sell as well. Now currently, the amount of loss realization is pretty small. So the price decline from 108K to the current levels is not necessarily driven by people giving up. It's mainly driven by investors that bought for lower prices that are now taking profit. Right? The green line is way higher than the red line. And so that then, of course, begs the question, how much longer will the people continue to realize profit? Because obviously there is a limit to this, right? At some point, the selling will be exhausted. At some point, all the people that bought lower, they will have already realized the gains. And again, that's the beauty of the blockchain. We can have a look at how much the market is still in profit. And the answer is in this chart. This is the net unrealized profit and loss. So the zero line is over here. The green area shows when people are in losses, and everything above is when people are in profit. So in orange, we see the long-term Bitcoin price. Again, a very long-term chart. And in blue, we see how much investors on average are in losses and in profit. And of course, we want to buy when investors tend to be in losses, right? That's when the prices are really at its bottom. That's when there's no more profit taking. Currently, the market is still 47% in net unrealized gains. So there's still the potential for the long-term holders to continue to take profit. In other words, there's still potential for the Bitcoin price to continue to trickle down when there's no new people coming into the system. And this is, I believe, how in general this market functions. There is this idea of crypto cycles, right? That every 3 to 4 years, Bitcoin sees those booms and busts. And how do those booms and busts actually develop? I think it's because when the price tends to rise, new people enter the space, right? When Bitcoin hits new all-time highs, then there's the media that covers Bitcoin. Then the people that are invested in crypto, they continue watching crypto YouTube content. That's why YouTube then spreads that content further out. So as the price keeps going up, the market is expanding. But at some point that growth has to slow down because the people that are somewhat interested in Bitcoin, they might have already bought, and then there's no new people coming in. Now, when you got interested in Bitcoin as the price rose and you've just recently bought and suddenly the price doesn't continue to rise anymore, but it rather tends to trend down. That's where you might panic, right? When you're just very new to crypto, you don't want to go through the bear market. And so as the capital shifts from the long-term investors to the short-term investors, the rally becomes less and less stable. And there is an inflection point when the growth halts and when the price then deflates, when then Bitcoin goes down by more than 80% sometimes. And so as people get more and more into losses, the selling pressure reduces as well. The long-term holders simply just wait for the next rally, and the short-term holders have already sold into the bear market. And so that's why it's so important to look where the current net unrealized profit and losses are. The average cost basis of the market is a very important psychological anchor point. Besides the buying and selling of Bitcoin itself, there's also, of course, the altcoin market. And the altcoins are mainly bought via stable coins. And looking at the stable coin growth, And contraction is also a very useful metric. Check out this. This is the aggregated market cap of the stablecoins. And it is an indicator with quite little volatility. We can quite clearly see if the market is currently expanding or contracting. It seems to still expand, but in the last few days that expansion has slowed down. So we see at the bottom, right, this area in green and red, that's the position change, as in are we currently expanding or contracting. So it's the first derivative of that pink line. And the stablecoin growth is slowing down and could potentially turn negative again. If it does, it's a clear sign of the bear market establishing itself. Now that's how many stablecoins are floating around. We can also have a look at the stablecoin market cap relative to the crypto market cap. So how dominant are the stablecoins within all of crypto? And that's then this chart. So at the top, we have been at 19%, and here at those bottoms, we had been at around 5%. Now, when this is high, this means that people are majorly in stablecoins. So people are very afraid. The stablecoin dominance could also be seen as a measure of how risk averse people currently are. And in the last 1.5 years, we had been in a band between 8.5% and 5%. But I believe if the market continues to trickle down, if the people continue to take profit and Bitcoin continues to rather trend downwards, then the stablecoin dominance is likely going to break out again, and we might get close to those 19% again. So the growth we have seen in the last 1.5 years might not be typical of what's going to happen in the next months. At least that's how I interpret this chart. The next few weeks and months will definitely be another waypoint of where Bitcoin and crypto in general is going from here. Do we see the market heating up again? Or are we going to go very low with Bitcoin's price potentially hitting $50,000, maybe even $40,000? I think the bearish scenario is much more likely. Again, the indicators seem to be all in line. Here's the percent of Bitcoin supply that's currently in losses or in gains. So you don't look at how much are people in profit. We just look at the supply in general. So if we hit a new all-time high, of course, 100% is in profit. If you come down from the all-time high, then less than half of Bitcoin supply might be in profit. Now, currently, still more than 75% of Bitcoin supply is in profit. We are far away from being at the end of a bear market in the historical sense. The average cost basis, or the realized price of Bitcoin, is currently $44,000. And in the past, at the end of a bear market, we tended to even fall below that. Here's a measure of how active trading in Bitcoin is. In other words, when the market heats up, when there's a lot of tourists entering the space, when the long-term holders transfer their Bitcoin to the short-term speculative investor, that's when we want to sell and we want to buy together with the long-term investors, right? When there's very little short-term trading going on. Currently, the market is cooling off again, but it's not yet at a level where it makes sense to long-term buy again. We are likely going to continue to contract. Again, another indicator that tells a pretty clear story. Nobody, of course, knows where the price is going, right? Nobody has a crystal ball. We all have to work with probabilities. We have to work with approaches that tended to work in the past. And that's what we're doing in this video as well. Short term, it might look like we are already cheap, because when we look at the unrealized loss of the short-term holders, so that's now this pink squiggly line at the bottom, it seems like now is a good time to buy. But once we add the long-term holders in this as well, we see that just because the short-term holders are in losses does not necessarily indicate that it's great to enter. We want to enter when the long-term holders are in unrealized losses as well. When the blue line is peaking up, that's when we want to get in, not when the pink line is peaking up. Now, there are different philosophies, especially around Bitcoin, how to treat those cycles. From the stock market, we know the saying that time in the market beats timing the market. In other words, we try not to pick the bottoms. We simply just allocate towards the asset class long term, and that way we just get the long-term appreciation of the asset. This might be a good approach in the stock market because it's very hard to time the stock market. It's a relatively efficient market, but Bitcoin and crypto in general is not as efficient. But still, let's work with this mindset. Let's say we just allocate towards Bitcoin a little bit every month. So that's what's called dollar cost averaging. And let's say we have a long-term commitment towards Bitcoin, similar to how people have long-term commitments towards the stock market, buying into a savings plan or into property, right? Paying off a mortgage. Let's say we've got something similar for Bitcoin. We dollar cost average into Bitcoin. We buy $1,000 every month, and we did this for the last 6 years. If you did so, of course, you would be in profit. You started buying Bitcoin at $5,000 and now it's way higher than that. You would have return of 335%. You invested 74K, you are now at 322K. So yes, this is an approach that works, but is it ideal? If we work with that idea that we actually believe in Bitcoin long term and we just buy Bitcoin no matter what happens, and we're going to do this for the next 3 years or for the next 6 years, we do this for more than one cycle, and if we are okay with that commitment, then maybe there's a better approach. And here is my recommendation. Here is what I personally did as well. Instead of buying $1,000 every month and investing 74K in the process, why not take a loan of 74K? Let's say this is your annual income, and let's say you take a loan of 74K, you buy all of this today, and you're paying this off over the next 6 years. Yes, there is a bit of interest, but in the grand scheme of things, right, given the volatility and the growth of Bitcoin, the interest doesn't really matter too much, right? Is it an additional 5 or 6% that you have to pay, maybe even 10%? It won't really move the needle. Let's actually make that comparison. Let's say instead of $1,000, it's only $900. So we only take a loan of $66,600. Had we invested that at the beginning, so at $5,300 per Bitcoin, then we would have gotten 12.5 BTC for that. And at the current price of $85,000 per Bitcoin, we end up with more than $1 million. And again, that compares to the simple dollar cost averaging with $1,000 per month that only gave us $322,000. So 3 times more money by just allocating everything at once instead of buying a little bit every month. And of course, there's a bit more risk toward this because we take on a loan and we really are forced to save into Bitcoin. We can't stop that savings plan, but that's quite similar to, say, a mortgage, right? There's a case to be made that it might be even a good thing that we get forced into saving. So instead of DCAing in, maybe it makes sense to just take 1 year worth of salary and pay this off over the next 4 years or 6 years, depending on how much you can afford. But when we do this, it's even more important to get a somewhat reasonable entry price because, again, there is some risk that we might take the absolute top. And again, I believe for that purpose, those long-term macro models are extremely useful. If the market as a whole is currently in losses, it's a very good time to buy. So maybe right now it's still okay to just dollar cost average in or to even not buy at all, right? I'm currently betting on falling prices. But when we are close to the realized price, then it makes sense to take on a loan. Now, I did that. I bought at around 20K 1 year worth of income, and I paid this off over the course of 1.5 years. And I'm planning to do the exact same again once we fall below the realized price. Now, the example that we just calculated, that was when Bitcoin was at $5,000 in 2019. So over here, at that point, Bitcoin was already above the realized price. So even with the calculation that turned 1 year worth of salary into $1 million, it wasn't actually the perfect entry point. If we had simulated the same when we were below the realized price, when we bought our Bitcoin at 3.5K, then it would have been maybe 1.3, 1.4 million even. It's a very uncommon strategy, right? It's much more common to take on a mortgage or to just have a stock savings plan or to dollar cost average into Bitcoin. But if we want to get ahead versus the rest, if we want to get higher returns than the average, then of course we have to take more risk sometimes, but we have to do this in a smart way. We take the risk when there's enough upside, and we also take adequate amounts of risk. As in, we don't want to take a personal loan that's so large that we have a hard time serving it. We also also don't want to take expensive debt, right? So I didn't say that we should 10x with perpetual futures. That's the wrong way, because then we can also get stopped out very easily. If we are below the realized price, we can still fall another 20-30%. And that's just what happened historically. I'd even calculate with potentially falling 50% below the realized price. I don't think that will happen, but it's better to be prepared than to have to panic when times get tough. The selling pressure is still on. The long-term holders continue to sell because they are still in profit. They are realizing that profit. Less and less money is flowing into the system. Potentially we are going to see outflows. And only when the majority of holders are in losses do we see interesting entry opportunities. Now again, the short-term holders are in losses, the altcoin speculative money is in losses, but Bitcoin is not yet in losses. And Bitcoin does have a big impact on altcoin valuations as well. There is a lot of correlation within the crypto market. And so I don't think it's that complicated to outperform crypto. When Bitcoin is very cheap, we buy in heavily, potentially with leverage. And if Bitcoin is expensive and tends to go down, then we bet on falling prices, especially of altcoins, because Bitcoin tends to outperform most altcoins most of the time. Now the community is already betting on falling altcoins for quite a while, since Bitcoin hit 100K. What we see here on the right, those are trades shared by members of the premium membership of the community here. So feel free to join us as well. I'm sharing my own trades, of course, and we also discuss risk mitigation and what platforms to use, what position sizing makes sense, and how to slowly but steadily grow our portfolio over time so that in the end we've got more capital to deploy once we are very, very low. The link to premium is down below. It's thebitcoinstrategy.com. There's also a 1-week money back guarantee, so you can try it out risk-free. If it's your first time over here, feel free to subscribe. I publish this regularly. A like would be much appreciated as well. Helps the channel grow. See you next time on YouTube, or see you in premium. Cheers!